All right, let's unpack this. It is Monday, January 19th, 2026. If you have been scrolling through the news feeds out of the Caribbean this past week, you have seen the footage. You know the situation in Jamaica has been, well, intense doesn't quite cover it. But today, right now, we are looking past the satellite loops of Hurricane Melissa and focusing on a very specific, very large number that just hit the wires.
It is the headline of the day, absolutely.
415 million US dollars.
hmm
That is the Lifeline, the International Monetary Fund, the IMF has just extended to Jamaica. And look, I know the drill. Usually when we hear IMF and hundreds of millions, it feels abstract. It feels like, high-level accounting that happens in boardrooms far away from actual people. But this isn't that.
No, not at all. This is visceral. This is a direct response to a crisis that is unfolding in real time.
Exactly. This is the aftermath of Hurricane Melissa. And our mission on this deep dive is to figure out exactly why this money is landing right now, what it says about the damage the island has actually sustained, and here's the part I really want to get into. How this cash is supposed to fix a housing and infrastructure problem that seems to be getting bigger by the year. We are looking at the collision of climate reality and, well, cold, hard economics.
And we have a fantastic primary source to guide us. We are working from a detailed report from Jamaica Homes News regarding the approval and the aftermath. It paints a very vivid and, frankly, a very sobering picture of what is happening on the ground.
So let's start with the trigger event, Hurricane Melissa. We know storms happen, it's the Caribbean. But the way this report describes the fallout, it feels different. It says homes, roads, utilities, public facilities just hammered.
The scope is the critical differentiator here. It wasn't just a coastal scrape where, a few hotels lost some shingles. The report highlights that the destruction was widespread across several parishes. We're talking about low-lying and rural areas where entire communities are facing what the source calls service interruptions and displacement.
And when they say service interruptions, they aren't talking about your Netflix buffering.
No. They mean the lights are out, the water isn't running, and the roads are blocked by debris. When you lose utilities and your home is damaged in a rural area, the path to recovery is significantly harder than in a city center with immediate access to resources. The logistical challenge of just getting to these people is immense.
And that leads me to something that really stuck out to me in the reading. I always thought, and correct me if I'm wrong here, but hasn't Jamaica spent the last few years specifically building up a safety net for this? I remember reading about catastrophe bonds and disaster funds. The government has been pretty vocal about being fiscally responsible, so why the sudden need for an emergency $415 million?
That is the twist, isn't it? And it's a crucial point to understand. You are right. The source explicitly mentions that Jamaica has developed a strong disaster risk financing framework. They weren't asleep at the wheel. They were prepared. They did the homework.
So what happened? I mean, did the dog eat the homework?
The storm was simply too big for the wallet. The report says the severity of Hurricane Melissa exceeded available buffers. Think of it like this. You are a responsible person. You save up an emergency fund that covers 3 months of expenses. You feel safe. But then in 1 week, your car gets totaled, your roof collapses, and you lose your job.
The emergency is bigger than the fund.
Exactly. Your savings were good, but the event was catastrophic. That is the situation here. The available local funds simply aren't enough to cover the immediate need for liquidity. And it's not just the physical damage causing this gap. It's the economic engine stalling.
Right, because the country doesn't just stop spending money, it stops making money.
Precisely. The source notes that tourism, which we know is the absolute lifeblood of the economy there, has been weakened.
Tourists don't tend to fly into disaster zones.
So that revenue stream dries up overnight, and simultaneously agriculture took a massive hit.
Which I assume doesn't just mean fewer bananas for export. It impacts the people living there immediately.
It drives inflationary pressures. This is basic supply and demand. When local food supplies are wiped out, you have to import food. Importing food costs money, usually US dollars. So you have a government trying to fix roads and bridges while simultaneously losing tax revenue from tourism and facing higher costs for basic goods. That is the urgent balance of payments need the IMF talks about. They need foreign currency to keep the country running.
Okay, so that sets the stage. The house is down, the savings are drained, and the income stream is stuttering. Enter the IMF. This approval happened just a few days ago, right? January 16th.
Correct. January 16, 2026.
Yeah.
And they used a specific tool called the RFI, the Rapid Financing Instrument.
I love how these financial institutions have complicated names for everything, but this matters, right? It's not just a standard loan. What makes the RFI special?
Speed and conditionality. A standard IMF loan is like a mortgage. It takes months to negotiate, there are 50 pages of conditions, and they check your credit score every week. The RFI is designed specifically for situations like this, large natural disasters where a country needs cash immediately to balance the books. It is emergency triage. It's the paramedic stabilizing the patient, not the physical therapist planning a year-long rehab.
So the money lands. $415 million, that is a lot of cash. The government can't just spread it out on a table and stare at it. Where does it actually go?
The government has signaled very clear priorities, according to the Jamaica Homes News report. It's going to restoring essential services and supporting the most vulnerable communities.
Which sounds good on paper, very noble, but what does that look like practically?
It means immediate housing repair, temporary accommodation for those displaced, and fixing basic infrastructure. You have to get the grid back up. You have to clear the landslides so trucks can move. Those are the prerequisites for any other kind of recovery.
But here's where it gets really interesting to me, and maybe a little tricky. The source talks about a fiscal tightrope. I feel like every time we talk about national economics, there is this tension. You have to spend money to fix the problem, but you can't spend so much that you wreck the economy.
That is the central dilemma.
Yeah.
It is the nightmare scenario for any finance minister. The state has to fund emergency shelters. They have to rebuild bridges. That is expensive. But they also have to maintain macroeconomic stability.
Break that down for us. What happens if they just say, forget the budget, let's spend whatever it takes?
Well, if they just print money or borrow recklessly to fund the recovery, they risk hyperinflation, they risk the currency crashing. Then the food imports we talked about become unaffordable for everyone, not just the storm victims. So they're walking a line.
So how are they balancing it?
The report notes that existing fiscal rules are being temporarily eased. Basically, they are giving themselves permission to color outside the lines regarding budget deficits for a short period to accommodate this recovery spending. It's a calculated risk. They are betting that spending big now to stabilize the country will allow them to return to strict fiscal responsibility later.
It's like putting a renovation on a credit card, because you know if you don't fix the roof, the whole house collapses, and then you have nothing.
A very apt analogy. And speaking of the house collapsing, we need to dive into the housing sector specifically, because this report is from Jamaica Homes News, and they are really laser-focused on what this means for the property market and the average homeowner.
Yeah, let's talk about that, because $415 million sounds like a massive amount of help. But when you look at the scale of damage described, thousands of households needing repairs all at once, that sounds like a logistical nightmare waiting to happen.
It is a classic, brutal supply and demand crunch. Think about the mechanics of it. You have a sudden massive spike in demand for construction. Thousands of roofs, walls, foundations, all needing repair simultaneously.
And everyone wants it done yesterday.
Exactly. But the supply side, the construction capacity, is finite. You only have so many excavators, so many cement mixers, so many skilled carpenters on the island. The source warns that capacity is expected to be stretched.
And it's not just regular homeowners, right? The government is also hiring contractors to fix the roads and public buildings using that IMF money.
Precisely. You have the public sector and the private sector competing for the same resources. And remember what we said about agriculture and inflation.
The double whammy.
Right. Damage to agriculture drives broader inflation. So at the exact moment everyone needs to build, the cost of materials and labor is likely rising due to these inflationary pressures. It is a terrible squeeze for anyone trying to rebuild their home.
That is brutal. You finally get the insurance money or the grant, and suddenly the price of lumber has jumped 20% and the contractor is booked until next year.
And it raises the question of what exactly was damaged. The vulnerability analysis in the source is quite telling. It wasn't random. The hardest hit were informal housing settlements and older structures.
Mostly in flood-prone or coastal areas, right?
Yes. And this reinforces a concern that has been around for decades regarding the built environment in Jamaica. We're seeing a pattern where the structures that are least regulated and least engineered are, unsurprisingly, the ones that fail. But these are also often the homes of the most vulnerable populations, people who can't afford the high-spec concrete bunker.
Which brings us to the bigger picture. This feels like more than just a cleanup operation. The source has this line that really struck me. Housing location, construction standards, and planning are no longer abstract policy debates.
That is a profound statement. Usually, zoning laws and building codes are things people gloss over. They are boring. They're bureaucratic red tape. But after a storm like Melissa, those dry regulations determine who has a roof over their head and who is sleeping in a shelter. The report says these decisions determine who faces prolonged displacement.
So we are at a crossroads. We have this $415 million injection. We have a broken landscape. What happens next?
The expert in me worries about what I call the trap of recovery.
The trap of recovery. What is that?
The trap's the overwhelming urge to rebuild exactly what was there before because it is faster and cheaper. You see a pile of rubble where a house used to be, and the instinct is to clear it and put the house back. But the source explicitly warns, rebuilding the same vulnerabilities back into the landscape risks locking in future losses.
Right. If you put the zinc roof back on the same way, in the same valley that floods, the next hurricane just takes it off again. You haven't fixed anything. You've just reset the clock.
Exactly. And the key decision for the government now, and this is where that IMF money becomes strategic, is how to channel those funds. Do they just hand out cash for repairs to anyone? Or do they incentivize resilient housing? Do they force rebuilding on safer sites?
That sounds like it would be incredibly controversial, telling people, hey, I know your grandfather built his house here and you grew up here, but you can't rebuild here.
It is incredibly difficult politically and socially. Land is identity in many ways. But the source argues that these choices will influence settlement patterns for decades. If you use this money to retrench people in flood zones, you are guaranteeing a crisis in 2030 or 2035. You are subsidizing future disaster.
And there is another layer here the IMF pointed out regarding the financial sector. They mentioned monetary stability being critical for mortgage markets. Can you connect those dots for us? Why does the average person looking for a mortgage care about the IMF's view on monetary stability?
It comes down to confidence in interest rates. Think about the banks and the insurance companies. They are looking at this destruction, and they are nervous.
They are looking at their risk models and seeing red.
Correct. If the recovery is messy, if inflation runs wild because the government is printing money to fix roads, then banks get even more nervous. When banks get nervous, they stop lending, or they lend at incredibly high interest rates to cover their risk.
So the guy trying to get a loan to fix his roof can't get one, or the monthly payment is impossible.
Exactly. Or the insurance companies, facing massive payouts, might decide the market is too risky and pull out entirely, or raise premiums so high that nobody can afford coverage. The IMF is saying that keeping the macroeconomy stable, keeping inflation low, keeping the currency steady, is essential so that the plumbing of the financial system keeps working. You can't rebuild a country with cash alone. You need credit.
It is all interconnected. The storm hits the farm, which raises the price of food, which raises inflation, which scares the bank, which denies the loan to the homeowner.
A perfect, if depressing, summary of the ecosystem. It highlights why that $415 million isn't just for buying bricks. It's for buying stability so the banks feel safe enough to lend money for the bricks.
But despite all this, the inflation, the housing crunch, the risk, the report ends on a somewhat optimistic or at least forward-looking note. They seem to think Jamaica can pull this off.
They do. The IMF believes that Jamaica's policy frameworks, the rules and institutions they have put in place over the last decade, offer a foundation for stability once this immediate shock subsides. They're saying the house is damaged, but the foundation is good.
And they frame it as an opportunity, which feels weird to say after a disaster, hey, great opportunity here, but I get the logic.
It is the opportunity to rethink, to not just repair, but to rethink how resilience, affordability, and safety are embedded into future development. It's a chance to upgrade the national hardware, so to speak. If you have to rebuild anyway, you might as well build it right.
And this brings us to the realization that the source really drives home at the end. Climate events are no longer exceptional disruptions.
That is the paradigm shift. That is the sentence that changes everything. For a long time, historically, we treated hurricanes like black swan events, rare, unexpected disasters. Bad luck. The source is saying, no, stop thinking like that. These are recurring forces.
Like the tides. Or like winter in the north. You don't act surprised when winter comes. You insulate your house.
Like the tides, but violent. And if that is true, then national security isn't just about borders and armies anymore. It includes land and housing resilience. If your housing stock can't survive the recurring force, you don't have a secure nation. You have a nation that is constantly in a state of repair.
That is a heavy realization. It changes the whole definition of what it means to be safe. It means safety isn't a state of being, it's an active structural requirement.
It does. And that's why this $415 million is so critical. It's not just for patching holes, it's the down payment on adapting to this new reality where the storm is a constant neighbor.
It's a lot to process. We are talking about nearly $500 million, basically, just to buy breathing space.
That's the phrase used, breathing space. It doesn't solve the problem permanently. It just keeps the lights on long enough for the country to make the hard decisions without collapsing under the pressure.
And those hard decisions are going to be made in the coming weeks and months. It's not just about the government, though, is it? It's about every person deciding how to rebuild their wall, every contractor bidding on a project, every bank writing a loan.
Absolutely. The macro meets the micro. The IMF writes the check, but the carpenter drives the nail. And if the carpenter drives the nail into the same weak wood in the same flood zone, the check was wasted. Everyone is a stakeholder in this resilience.
Man, okay, let's wrap this up because my brain is already spinning with the implications here. It is one thing to read the headline, IMF approves money, and another to trace that money all the way down to the nails in the cement.
It is a complex situation, and the stakes couldn't be higher.
So, final takeaway. We have the money, we have the plan, we have the warning. What is the one thing you want the listener to walk away with?
I want them to focus on the timeline. The $415 million is immediate relief. But the choices made during this specific reconstruction period right now in early 2026 will determine if Jamaica is ready for the storms that inevitably lie ahead. We cannot treat this as a one-off event. The success of this funding isn't measured by how fast the money is spent, but by how much stronger the island is 5 years from now.
It's the long game. It has to be.
Always.
And here's a thought I want to leave you with, listening at home or on your commute. If the experts are right and storms are now recurring forces, just like gravity or the sunrise, does the concept of home ownership in these vulnerable regions need to be fundamentally reimagined? We spend so much time talking about stronger bricks and mortar, digging deeper foundations, trying to fight the wind. But maybe we need to talk about flexible housing, movable communities, or entirely new models of living that don't rely on a concrete box staying in one place for 50 years.
That is a provocative question. Is permanence actually a liability in a changing climate?
Exactly. Maybe the goal shouldn't be to stand still against the wind, but to learn how to move with it. If the land is going to flood, maybe the house shouldn't be attached to it. It's something to think about as we watch this reconstruction unfold.
Indeed. It's a conversation we need to have.
Thank you for diving deep with us today on this critical moment for Jamaica. It's a developing story, and we will be watching how that $415 million gets put to work.
Thank you.
Stay curious, stay informed, and we will catch you on the next deep dive.